Oh man, it looks obvious. Markets are going to crash further from here. I'll explain why that is here briefly in this video, but I more so want to focus on ways that you can hedge your portfolio if that's something you are into. What I think is an attractive buy, aka Tesla, if markets do fall. Do I think Tesla is going to fall? And if Tesla is going to fall, where are we going to go? Like, how low are we really going to go? And how bad could this really be? I think you'll learn some things. I think you'll get some value out of this video nonetheless. At the bare minimum, I'm not afraid to share my opinions. Whether you like them or not, disagree or agree, it doesn't matter. Hopefully you take in my opinion, formulate your own opinion, gather other opinions, and come to a more definitive conclusion for yourself. That's ultimately what these videos are for, so I will share my opinion with you in this video. Go over the charts, option activity, and different indexes, all kinds of different things. In the meantime, before we get into it, hit the like button, subscribe to the channel, let me know what you think about this information down below in the comment section. So I think first things first, why the markets responded negative today, down about 2% on the NASDAQ, couple different reasons. I went over them in the last video, so I'm not going to focus on it too much because I actually don't think any of what we've seen today, for the most part, is the reason why markets are going to crash further. The three main reasons why markets really sold off today was a bad start to earnings season with the banks. That's never good. You have, which this is not chronological order, because the thing that caused the most fear today, that caused the most downside, was this whole Middle East baby mama drama between Iran and Israel. We're kind of waiting around, twiddling our thumbs, waiting for Iran to attack Israel, and then to see what the response is from Israel towards Iran. And at that point, I mean, the US probably gets involved as well. Is that going to be a problem, though, for the markets? Could that cause more of a sell-off in markets? And I'll talk about that here in this video. But the last thing that caused some fear today, you can kind of group these together, was some hawkish comments around the Middle East, around inflation from Fed Goolsbee. You also did see a rush to protection today in the VIX. You did see the VIX up over 20%. Gold did really well in the beginning of the day, kind of sold off into the end of the day. Bonds did really well. You did see this overall risk-off attitude in our markets. And I would say that in and of itself, kind of a negative catalyst today. Now, as we wait around to see if Iran does attack Israel, I think we can draw some conclusions here. I don't think Iran is trying to get into a full-on war. If push comes to shove, they will back down, okay? I think that's pretty obvious. They don't want to end their regime. That begs the question, how far is this conflict going to go? I think it makes a lot of great negative headlines for markets. I think it's a good story, right? Two enemies going at it for the first time in a very long time directly at each other. But as far as this escalating into an actual like ground offensive situation, you would have to get news of like Iran having nukes or something like Desert Storm or Gulf War type crap over again. I don't think that's in anyone's best interest, okay? So I don't think it's going to go that far. If it did go that far, that's obviously a larger problem. Markets, if you go into large conflicts, do not tend to do well. But odds are this is only going to be a tit for tat kind of situation. The biggest thing that actually has an impact to our markets, though, is oil and energy. So obviously Iran, big producer of oil, but even more importantly, they kind of control, like in air quotes because it's international water, but it's like right off of Iran. They pretty much control the Strait of Hormuz, which controls about 30 to 40% of the daily oil supply that runs through it. All the countries, their Middle East oil, pretty much all of it, runs straight out of the Strait of Hormuz. So the initial reaction from some kind of attack between Iran and Israel is oil is going to go higher. And I think that's the implication that is negative for the markets, but I think that only goes so far. Unless Iran were to block the Strait of Hormuz or do something directly related to cutting off the supply of oil, I think any kind of rally in oil would likely be short term unless this thing did go into a full-on conflict, which I think betting on that is statistically a low probability at this point in time. Obviously, it's there and there is a chance of that, but it's probably not going to happen. And if we do see an attack from Iran on Israel, it's probably going to be very limited, mainly just a show of force without doing too much damage or causing too many casualties, if any at all. Could I be wrong? Of course. Maybe it already happens by the time you guys are watching this video. That's a possibility. And if that's the case, I'll be making a video here shortly to go over exactly what happened because of the implication for our markets. But long story short, let's just kind of get to the meat and bones here in regards to the markets. Unless this thing goes into all-out war, Israel blocks the Strait of Hormuz, or just something that really just fundamentally impacts oil, I should say, I think these headlines, this fear, it's gonna be short term. It's going to be short-lived. I think the biggest problem for the markets is actually what you've seen this morning with the banks. They provided some troubling guidance. And if that's the trend that we're heading into this earnings season of companies meeting expectations, giving not so great guidance, that's a problem. But let me be honest with you. I think even if companies meet expectations, I almost know for a fact, in my opinion, obviously I don't know for a fact, I'm not a financial advisor, I'm not going to make predictions like that, like I do know, because I don't contact financial advisor, none of this is financial advice, but I am very confident if companies just come in and you know, barely beat on earnings, meet expectations, markets are not going to look at that as good news. Following, you know, this rally that we've seen, expectations are already very high, and that's not a great scenario to be in. Again, like I said in the last video where I warned you guys about the downside that could be coming today, hindsight's 2020, the downside came. I think if you sell off next week into big tech earnings, you're in a better position than not for bad earnings or for earnings that are along the lines of expectations. But I don't know what's going to happen next week. What I will tell you though is there was a lot of firms, big money, retail investors that sold stocks today in our markets and hedged their portfolios for the weekend of volatility. I'm sure there's room for a lot more selling and or hedging, just considering where markets are at. I will say the potential good news out of all of this, if the economy holds up, that's fantastic. If people continue to spend money, that is great. If the markets do go through any kind of moderate correction, the Fed's going to talk about cutting rates a lot sooner than what the markets are currently expecting, for the first cut being in September. So I guess that could be a little bit of good news. If markets do crash, if earnings come in bad, the Fed is going to use that as an excuse to start cutting rates, potentially as soon as June. With that said, today on the NASDAQ, you really sat at a very important level, your 50-day moving average. You have found a lot of support at this 50-day moving average. I think, with almost, again, certainty in my opinion, that you're going to fall down to this 100-day moving average at about $420 on the triple Qs. This likely happens next week. That would be about 4% downside, especially heading into other big tech earnings. Companies have ran up a lot. There's a lot of profits. To see some profit taking, I don't think this would be, too far of a wild statement to see some selling before big tech reports their earnings. Now, to get back to the 100-day moving average, you would still be holding quite the gain for 2024 and quite the gain off of the lows you've seen back in October, November of 2023. Question is, do you bounce at that 100-day moving average or do you continue to sell off? If you continue to sell off under that 100-day moving average, let's say you fall back into the 390s on the triple Qs, that's where you might start to see the Fed get a lot more dovish and potentially start talking about rate cuts again, because I think a lot of people forget, like 4 Fed meetings ago, the Fed actually said that stock prices may influence Fed policy. Like if we've seen a sharp move down in the markets, that would affect what the Fed does. And I believe that was during this 10% correction or so here when people were calling for markets to go even lower. The Fed basically said, yeah, we're going to bail out the markets if this thing gets worse. And of course, after that, it started to get better. But I think really all bets are off the table, right? As far as how earnings can go. Because I don't think anyone has any real idea. And if the banks did this poorly, then I mean, I'm not going to say other big tech names are going to have good earnings. It looks like Apple is kind of getting hurt on the profitability side. They're cutting interest rates on their savings accounts, just weird things, laying off the rest of the Apple Car employees. Looks troubling in some areas, I will say that. And as I said in the last video, I do believe when it comes down to earnings, it will be on a stock-by-stock basis also. And the areas that I'm more bullish on heading into this earnings are the areas in which that have already sold off. So Tesla, I think, is one of the best areas to be bullishly positioned heading into their earnings. As long as we don't get crazy bad news, I mean, what's going to surprise Tesla stock investors at this point? Honestly, not much. And if you do get good earnings, then Tesla stock could do very well independently, even if the markets were falling. Now, I think this becomes a lot bigger of a wild card if this whole Middle East situation does turn into an actual war with boots on the ground. Markets historically do not do well upon the initial couple of months following an event of that nature. So I think that could really dampen the mood around the markets as well. Again, doesn't really have a huge negative effect on Tesla. If anything, it actually could be good news if the price of gas goes crazy. Well, that could push a lot more people to start looking at electric vehicles, which could temporarily give Tesla a boost of interest. So if you want to look at it from that perspective, I can understand that argument as well. I've had quite a few of you guys say down below in the comment section, hey, isn't this rise in gas prices actually good for Tesla? And yeah, it's good for Tesla, especially now that they are advertising just that. I mean, the money you can save on gas, how much cheaper it is to charge compared to gas, it could be all at a perfect time for Tesla. Then again, if Tesla does not reaffirm they're going to focus on profitability, the stock's going to fall. Big question is, where does the stock go? I think 160 is kind of the floor as of right now. Even if we have earnings that are so-so, like there's nothing to be like, yeah, that's really good news, you know, just kind of so-so. Some good news, some bad news, really, your world's not rocked off Tesla earnings type of deal. Then you probably fall back to that 160. Now, I think we're set up in a way, given the Reuters article, for Tesla to reiterate a couple key things, like the Model 2 still coming in the second half of 2025, but which it's probably going to be the robo-taxis first instead of consumer deliveries. And Tesla really promoting FSD, promoting the robo-taxi network on earnings could be a big positive for the stock as well. In that event, I would expect Tesla's going back into the 200s. Let's just be honest there. Tesla's going back into the 200s. I don't think it matters what the markets are doing if Tesla has good earnings. They give you good guidance. They have good things to say about the Model 2, about FSD and the robotaxi network. I would be very careful being negative on Tesla just because the markets are falling, if that is what happens over the next, 10 days or so. I will also point out that Tesla's short interest is at the highest levels it has been at in a very long time. And you could be prone or vulnerable to a big upside move on any good news at this point. I think this earnings for Tesla and really the next couple of weeks are going to be on a level of importance that you have not seen in a long time. The narrative itself could change for Tesla. Instead of Tesla's profitability being, taking a hit throughout the rest of 2024, it could change the narrative to Tesla's going to focus more on profitability and profitability is going to improve. That totally changes everything for Tesla stock. Now, ultimately, I think these fears in the short term are going to subside, and I think the areas of the markets that are priced for perfection are likely going to fall, which are your big tech names, your AI stocks, think Nvidia, Microsoft, Facebook, Meta, stocks like that, which could lead the S&P and the NASDAQ to fall, but I wouldn't be convinced that it causes broad downside for a stock like a Tesla or other small cap, mid cap names. Could it? Of course it could, but that's not my expectation. If things get really bad and this Middle East baby mama drama gets way worse, if earnings come in bad, if Tesla's earnings come in bad, then I would be targeting downside of roughly 135. That seems like, a downside that's not likely, but possible, okay? To get down to 135, that would be downside of about 21% from here. To get down to 130, that would be downside of about 24%. I don't think that's likely at this point, but is it possible? Yes. So let me know your thoughts, your opinions, your comments, questions down below in the comment section. Hit the like button, subscribe to the channel. If you guys want to come trade with us live in real time, check out that link down below in the description of this video as well. I really want to know your opinions here. What do you think is going to happen next for our markets? Because I think you are at a defining moment for 2024. We've obviously, we haven't been in a scenario like this where the writing's on the wall for a larger decline in a long time. At the same time, the writing's also on the wall for Tesla to give investors an upside surprise or two on earnings. What does that combination look like for Tesla's stock? If markets sell off and Tesla does well, does Tesla do really well? Does Tesla do not so well? Does Tesla just disregard what the markets are doing? It's hard to say. I would love your comments down below in the comment section. That's it. You guys enjoy your weekends, and I will see you in the next one.